What's going on, everyone? I hope you guys all had a good trading week. I hope you guys were all profitable. If you were not profitable, continue to figure out what those mistakes are maybe that you made. If it was just pure market price action, you know the setup was good and then the market just took a turn, nothing you can really do about that. That's the name of the game. But if there is something that you can kind of work on, whether it be risk management, whether it be controlling your emotions, whether it be your size and how much you're leveraging per trade, there's always some adjustments that we can make. So just kind of keep that in mind. We need to continue to make adjustments as a trader. We could never sit here and think that even I don't care how long you've been doing it, 10, 20, 30 years. Yes, the experience is going to help you along the way. It's going to help your comfort levels, a lot more. You're not going to be as rushed when you're in a trade. You're not going to feel the anxiety, or you're not going to get too excited for wins or losses. But we're constantly having to learn price action. We're constantly having to learn about ourselves and learn the different directions of the market and how the market is reacting to certain things and news and certain levels of supply and demand. With that being said, we're going to take a look at the S&P 500. One thing that I kind of do want to point out here now is the rally, the short-term rally, over. Okay, that's what I kind of want to talk about. If we kind of go back, I'm looking at the weekly chart here. So for everyone kind of complaining about some stocks kind of pulling back, or maybe, why aren't we going any higher? If you have not been making money the past 3, 4, 5 weeks, what have you been doing? That's something you kind of need to think about. You have to always try to be in the direction of the trend. You have to be always in the direction of, where are we going as a whole? And if we kind of look back, if this is the weekly chart here, each candlestick is going to represent one body's worth of trading here. So if we go back 1, 2, 3, 4, 5 weeks since coming off of the weekly 200-day moving average, okay, this is huge here. I was telling a lot of the people in the Discord, especially the people that I work for, anytime we come into the 200 or approaching the 200, it's a big level here. So when we started to get this breakdown here on September, the last week of September, and then we got this massive bounce here with a big kind of like, this wicking candle coming back down. What you were looking for here was the flush through 356.75. Now it did come the week of the 10th of October. We did get the flush through 357 all the way down to a price of 347. So this was a 10-point move. I hope that people kind of, took advantage of to the short side. But, the next week, not only do we kind of put in this little gap up, but we now reclaim the 200-day moving average, and then we kind of push higher. So the last, realistically, 1, 2, 3, 4, 5 weeks should have been making money to the long side, right? Not to say that if you're a scalper, there wasn't some trades to the downside, because again, remember, not every week, not every day, right? We had a down week here, and even on these green candle weeks here, there was red days, right? So it's not just going to go straight up. There's always ways to make money on the short side as well as the long side. But what I'm trying to say is that if the overall direction was bouncing, right? If the overall direction was bouncing coming from the bottom of the 200-day moving average, then we should have been thinking long, right? We should have been trying to go long, stay in the direction with the overall trend. Now, as we come into this current week, look at this indecision candle that we have here on the SPY at 397, kind of closed right here at 396. We got rejected right at the 50 EMA, as well as the linear regression channel 50, as well as the 100 EMA on the weekly time frame. This little bit of an indecision candle here is kind of could be a forewarning of that could be the short-term bottom. I mean, the short-term top. Not to say that we don't pull back 1, 2 weeks, or maybe even 1 week, but we could pull back and then rip. So I'm not going to personally look to go long until the S&P 500 gets back over 400. Okay, we need to get out of this channel. What I would like to see is this: either 1, 2 weeks of sideways action, or 1, 2 weeks worth of pullback. Either or, I think stocks need to rest. If we are going to go higher, we're going to need to consolidate sideways and then push up. Next price target would be 414, 415. If we do pull back, I would look for a pullback into 386 or 384. That would be the first price target, at least a 10-point pullback, right? If we do close, okay, if we do close below 384, 385, the next area, the next zone that we're looking to short down into is 375. Now, if we do get a pullback into 375, I would look for this to stand if the market's going to continue higher. If we cannot hold 376, then we're going to put in a new low. Okay, so that's the technical analysis. Stocks are getting tired. It's now time to come off this 5-week run up and start thinking back down to the downside. And we have a price target of 384 and a price target of 375. Let's try to play the consolidation back down, and let's see if this area around 375 holds. And if it does hold, we can play back up. And obviously your macro trade is over 400, okay? Over 400 takes us to 414. But if we do close on a weekly candle below 376, I am going to bet that we do at least test the 200 or test the lows or make a new low, okay? So this is how I'm going to navigate and play my trades personally. Personally, I'm looking to go long over 400, okay? I'm looking to go short under 390, okay? 390 into 387, from 387, 385 down to 374. If we hold, I'm looking to play back up. If we do lose 375, I'm looking to play macro-wise down into the 200-day moving average at around 360, and then even potentially this bottom wick here at 348. So if you just kind of go back in time, look at the high here, look at the pullback, look at the run up, right? 1, 2, 3, 4, about 4 weeks worth of run up. Look at the pullback, 3-week run up. Look at the pullback, 3 weeks of consolidation, 5 weeks of a run up. Look at the pullback, and now look at the run up. So if you just kind of go from a chart on the weekly chart standpoint, drop, pop, drop, pop, drop, pop, right? Pop, drop, okay? Again, drop, pop, drop, pop, drop, pop, drop, okay? That's what it looks like. If this pattern that we're in here since the beginning of the year is going to change, then what we're going to do is pull back, but not drop, okay? Pull back, but no new low. Each time here, new low. Here, new low. Here, no new low, then we're going higher, okay? If we do not put in a new low, we will pull back halfways and go higher. If we do break down below halfways, we will put in a new low and then pop once again. I hope this video helps you guys. Hope it helps you navigate your trades. I will see you guys all on the next video. Make sure to join the Discord. That link is down in the description box below. My name is D. Anthony with EvolutionTraders.com, and I will see you guys all on the next video.